On December 31, Ott Company had investments in equity securities as follows. The Mann Company had a cost of $10,000 and a fair value of $8,000. Chemo Incorporated had $9,000 at cost and $11,000 at fair value. And Fenn Corporation had $11,000 at cost and $9,000 at fair value. So the total cost for each of the three companies combined was $30,000, and the fair value for all three companies combined was $28,000. If Ott does not have significant influence over the investee, its December 31 balance sheet should report the equity securities as. All right, when we have investments in equity securities where we don't exercise influence or control over the investee, then we report these securities at fair value. That's it, fair value. So let's review our answer choices. Answer choice A, $26,000. Well, no. We already know that the total of the fair value for all three companies combined was $28,000. The amount of $26,000 is put here to confuse you. It represents the lower of cost or fair value, determined on an individual security basis. So to illustrate this, the calculation results from adding the lower of cost or fair value for each investment. So they take, $8,000 in fair value from Mann, $9,000 in cost from Chemo, and $9,000 in fair value from Fenn to arrive at $26,000. It's the wrong answer. That's not the approach we should take. Choice B says $28,000. And as we've already pointed out, this in fact is the number we're looking for. This is the correct answer. So let's come back to this one. Let's look at C and D first. C says $29,000. Now, what they're doing here is the $29,000 is the average of the aggregated cost and aggregated fair value for all three companies. So the cost, if you remember, tallied to $30,000 for all three companies. The fair value was $28,000 aggregate for all three companies. Add those together, you get $58,000. You divide by 2, voila, you arrive at $29,000. That's not the approach you should take. Choice D, $30,000, is also incorrect. This is just the aggregate cost. So we don't report investments in equity securities where we don't exercise influence or control over the investee at their aggregate cost. We report them at fair value. So we know choice B is the correct answer at $28,000. Just as a reminder, an investment in equity securities that does not result in significant influence or control over the investee is reported at fair value. And by the way, any unrealized holding gains and losses are included in earnings. Consequently, the security should be reported at $28,000. B is the correct answer.